Today, I'm going to blow your mind with a Monopoly board and a pair of dice.
Hey, Tim, question. Why would we do that?
Because in my last episode, I gave specific parameters under which something goes from improbable to probable, and the responses I got were, so you mean we're definitely going to make a lower low?
Does this recent pump change anything?
This means bear market, doesn't it? So today we're going to visualize what I said with a Monopoly board and a pair of dice, and then we'll deep dive into the charts. Are you ready? You better be. All right, we're going to get to the Monopoly board here real quick. It's going to be a really cool thought experiment or a visualization of the thought experiment we did in the last episode. However, what I did say, actually, not what I was saying, is the trading edge changes specifically in regard to this is the low under a couple of parameters. Parameter 1 is that price gets above the 1 hour 200 EMA and sticks its landing. That's one parameter. That's just one thing. And right after I uploaded that video, and maybe at the same time I uploaded a video, price got above, yes, but it had hours to go until it could even touch the 200 EMA on the 1 hour chart, right? So that didn't happen until like hours and hours and hours later. Look how many candle hours that is. That's roughly 8 to 10 hours later, right? So the one parameter is you get above the orange line, which is the 1 hour 200 EMA, and land. And the second parameter was these both have to happen in order to get an edge that this was the low. The second one was the Stokes down here. The Stokes needed to get close to the bottom, which they did. That's close enough, kind of on a trend line, and curl back up. And if both of those things can happen, you get above, stick your landing as one, the Stokes go down low and turn back up, then you have a trading edge. That has now happened, but as of yesterday, that happened while I was sleeping personally. That just happened. So in terms of the probabilities changing, I want to show you with a Monopoly board that situations change. And in Monopoly, you are forced to roll the dice when it's your turn, right? And a lot of times later in the game, if you're getting close to the end of the board where you're getting close to boardwalk and somebody owns all that, with luxury tax over there and everything near the end of the board, right? So in trading, you don't have to roll the dice. You can be sitting on a Monopoly board with shitty odds, like crap, I can only roll a 2 and a 4 and stay safe. And then I'm going to lose all my money to the person who owns the boardwalk and the other pieces, other color, whatever it is, red, right next to it. Like I'm going to lose if I don't roll a 2 and a 6. So in trading, you don't have to roll the dice. You can wait until those people, disappear off the board. You can simply wait. So what I was saying, and I'm going to show you here, was right now, your odds of rolling the dice, it's not the greatest scenario. You're rolling into an unfavorable situation on the Monopoly board. So that's what we're going to do. Let's do it. Come on. Better be excited about this. What other crypto channel can you possibly, learn about probabilities and trading with Monopoly? All right. So I'm going to move myself over to the left-hand side. Okay. So we have a Monopoly board, and please take a look at where you are. We are starting on this guy here. All right. So we are here. Okay. And you can see here that I have the 1, 2, 3, 4. Can you see these all the way down? This is 11 and 12 is safe. Okay. All right. So right now at the beginning of the game, you actually only have one bad area. Too bad. And no one owns this. No one is on these. The green, they're empty. Out of 12 possibilities of rolling 2 dice, you're only kind of screwed if you roll a 2 or a 10. So let's roll these dice. Okay, I'm safe. I landed here. I'm good. I will purchase this, right? Okay, but what we had in the trading area in Bitcoin was more similar to all of these being owned, and you'll have to really pay up, right? So now you have 1, 2, 3, 4, 5. So it was more like this actually. There you go. So out of 12, you need to roll a 1, a 5, a 7, an 8. Or a 12, so you have 5 good ones, 7 bad ones, right? So at that time, what I was showing you was the probabilities go from this in Monopoly, right, where you're barely safe. So let's roll the dice. I told you we're going to be rolling dice here. So I got a 7. I actually saved. So if you were trying to long, at that time and go into trades, you could have gotten lucky. Things actually, that could have been the low, because I just safely got around all this, right? Okay, I haven't gotten past blue yet, but you could have been right. You could have been. Okay, and I see a lot of people on Twitter with a big following saying, yep, that was likely, that was likely it. No, it wasn't. That's horrible advice. You were rolling into the situation. Now, could they be, essentially lucky and against the actual statistical odds and roll here, and what they ended up saying is correct? Yes. So so if it did end up being the low, that would be like them rolling the dice on here, which I just did. But if you do it 10 times, you're more likely to get screwed than not. So in that situation, the next time's on the board, you roll a 5, bam. Actually, I got lucky twice. Look at that. So I got lucky twice. So let's keep rolling the dice. A 6, I landed here. Now I have to pay this person whatever the rent is for that, because they have a hotel or a 3 houses on it or whatever, right? So I got lucky twice, right? So the next time Bitcoin is in that formation, you are literally in. So even when it gets above the orange line but hasn't landed on it, you are essentially rolling into this. Can you get lucky a few times that yes, that was the low? Absolutely. You just saw me actually get lucky in my first 2 rolls. But let's keep rolling. And the more I do it, the more likely that in the end, the odds are literally 7 and 12. And, so the closer to, 10,000 times that I do this, the closer and closer and closer that I had a 7 and 12, the results are 7 bad, 5 good, right? And in trading, you don't want to roll into that. You want to roll into, you might want to start trying when you have a 50-50, but be very careful. And so what you can do in trading is you wait until, for example, this person, loses their stuff. So you wait until that, and now you can roll into 1, 2, 3, 4, 5, 6, 7 good ones. So now the odds have flipped. So 7. Now you have 7 goods and 5 bads. And all I was saying in that last video is these are the specific parameters under which the board changes from what I just had it to this. You would prefer rolling into this without somebody owning these. Wait until this person leaves and then roll your dice. Now, that's literally what that was. So those questions and and it's good to ask questions. I was beating my head and making a voice. I wasn't making fun of anybody. However, I'm making videos here and, I'm supposed to grab your attention, but hopefully you're still here and hopefully I succeeded. Hopefully this was a good learning lesson. So now I want to dive into the 1-hour charts and show you the history, how I got these figures so you can live the history of Bitcoin and how price moves. This is going to be very exciting stuff. We're going to use the 1-hour chart and I already have it all drawn out, so you're not going to have to be bored. Let's dive into this chart. You ready? You better be. Come on, let's go. All right, here we go. I missed my transition.
Hey, Tim, you pointed at the camera and you didn't transition. Yeah, I know.
All right, so here we go. I'm excited. You better be excited. This is going to be cool. Okay, so this is current price. I'm going to zoom out here and I'm going to give you, so thinking with the end in mind. Okay, so thinking with the end in mind, here are the statistics of this, the parameters I laid out at the very beginning of the video. Okay, so in the past 17 months, the situation has happened 10 times where price tanked. So the parameters was price had to drop 10% below the 1-hour 200 in order for it to be included in the sample size. Had to drop 10% below the 1-hour 200 EMA, and because I'm not counting every little dip, right? It's the dips at least that big or bigger. So in 17 months, it's happened 10 times, right? Okay, so when you stick the landing and the Stokes go pretty much all the way down and curl back up, still 3 out of those 10 times, a lower low was formed, and or it was actually a lower low in all 3 of these, but it's also very possible that in the future, when this number gets higher and higher, as the months go on, it'll be retesting the low. So a lot of times it's not a lower low, but it's retesting lows. Therefore, you don't necessarily want to, especially on futures, you don't want to go in at that time if one of these were to play out. However, 4 out of them, the method worked perfectly. You literally pumped right after you waited for those conditions. So you rolled the dice, you landed on a good monopoly spot, right? Okay, and then 3 out of those 10 times it worked, but if you were playing futures with stops, you would have had to try your entry 2 times, and if anybody knows, much about futures, or if you're a part of my community, and if you're interested in the community, the exclusive community, the link's in near the top of the description section of every video, if I can speak clearly here. But anyway, as I say to them, usually good entries, it takes you 2 to 4 times to get in one. Right? So when you enter on futures, futures specifically meaning leverage, right? You can get liquidated, you can lose your money, all that stuff, right? On spot trade, that doesn't really, you can't get liquidated, right? So spot trade is just like buying Cardano with no leverage, or buying, whatever, Bitcoin without a futures count. So on futures, you typically want to enter when you hit buy, or if your limit sales get hit, you emotionally need to expect that time won't work out. I'll have to try it once or twice, right? You should always go with those expectations. And with those expectations, that's why you get aggressive with trying to get your stops into profit, right? Okay. So this I count as a success. So getting stopped out just one time, right? I think that's a success. So I count that 7 out of 10. So even with that, if you add those 7 reiterations together out of the 10 times it's happened in the last 17 months, even these times with one stop, the low was in, and these 3, it didn't even retest the lows. It just would have knocked you out of a reasonable, like you probably would have been stopped out if your stops were reasonable. But still, that's good. So 70% chance. So right now that the Stokes are curling up, I really do think there is a 70% chance, right, that the bottom is in as of now, and per the sample size. So the sample size, the statistical significance isn't great because it's only a sample size of 10, but it's the information that we have in front of us, because before 17 months, Bitcoin behaved totally differently, and because investors weren't in it at that time. So I think this is the best 10 I could come up with. Actually, these 10 might be a better representation of like true statistics with the current buy and sell pressures and what's creating them, better than going farther in time and adding more reiterations, because institutional investors weren't in it at that time. So I think this is like the perfect 10, I guess pun intended, like this is the perfect 10. Okay. Yeah, so I just came up with that on a whim. That was actually not that bad. So now these 3 here, so you actually got a blast 30% of the time right after it. So no waiting, you entered and bam, blast. Okay. And so what this number here, right here, is average number of EMA failures. So before price took off, how many times did price come above the orange line and then go back down? So the average number of times was 2.14. So a couple times it was 5, a couple times it was 0. On average, it happens, just over 2 times. How many times has it happened now? Only once, but that's still within the normal range. And the range of those was it happened between 0 and 5 times. So EMA failures means the times it went above did not stick its landing, therefore fell back down. It was an EMA failure, right? Okay, now the times it price blasted without sticking its landing was 0. Never happened. And it's not going to happen this time either, because if it blasts, well, it's already stuck its landing. So that number it actually looks like it's taken off right now. I think that's it. Yep, it just broke that. It's got a good chance of racing up to 61 now. All right, so we're going to deep dive into these numbers. Now so even though I'm not focused on current price, stay with me here, because viewing how Bitcoin has moved is going to make you better at guessing and analyzing how it will move, right? Okay, so that's what we're going to do. So take a look at this. You have a rejection, so it didn't get above a rejection. So I don't have any red arrows here. So as we go back in time, you'll see red arrows where price got all the way above and came back down. But here, look, price got above the orange line, stuck its landing, Stokes came down, curled back up, kablam, right? Okay, now so the red box, though, the red box is a failure. So whenever you see red boxes as I'm scrolling along here, that is a failure. So I'll take off the RSI here, put on the Stokes, make these bigger so we can see them. So here it failed because it got above the orange line, and right here it stuck its landing, and the Stokes went all the way down and curled back up, but it didn't work. So that's one of the 3 failures out of the 10 reiterations, right? And so this was a 17% dip. 17% dip. The second number in all these is how many times you failed the 200 EMA. These are just straight up rejections. So it had no failures. It had rejections. So it had 0 failures before blast off, and it had 0 stop hunts. So this is the percentage drop. This is how many stop hunts in this reiteration. And this is how many times it went above and failed the 200 EMA. Okay. So here you just have a 14% drop from here to here. and the method failed. It simply didn't work. Even though you had the edge, it's like, you know, on that Monopoly board, even though there were, you know, it was like me landing on here. Like, even though I had a pretty clear signal, 7 out of 12 chance of landing safe, that's like landing here. So that failure here, so that red box is like rolling the dice and you landed on green, even though it wasn't statistically probable that you landed on a bad spot, but it still happened. It can still happen. It's like Monopoly. I promise you, like you had the probabilities to your favor, but you can still get screwed if you're not using risk management, right? That's why risk management is. It doesn't matter how good your edge is. It can, like, the opposite can happen. It's still a non-zero chance that the opposite can happen, something catastrophic, even though you had the chance of an up move or a favorable move happening. All right, so these red arrows are indicating the times it got fully above the orange line and failed it. So 3 failures, which is what the second number is, and you had a 48% drop. This is from the 𝘾𝐽𝐝 stuff, right? So you're seeing even how 𝘾𝐽𝐝, like the 𝘾𝐽𝐝 distribution pattern, how it ended. It ended with the 1 hour getting above. The Stokes actually came down twice. Extra confirmation while sticking its landing. And I called, so you can check my Twitter and all that stuff. I said, hey, once this happens, it's going to blast. And 15 minutes later, or whatever, it happened, because this was very obvious one. Like, this was the perfect setup to getting into long positions. You had a double Stoke bottomed out test. Double, and it didn't even wick below the orange line. Like, that is perfect. And that's how so there was one failure within 𝘾𝐽𝐝. There was one. So price got above the 200, stuck its landing. Stokes had a double confirmation as well, and it still failed. So sometimes this simply doesn't work. It is not perfect, right? Okay, so you have another reiteration here so that's a lot so most of the failures are of recent, right? So you had another failure. You got above the orange line, you came down, Stokes came all the way down, and it stuck its landing, and then it still failed, right? So that's actually all 3 failures. Now, all these other reiterations over these past 17 months, they worked. It worked. Some of them had 1 stop hunt, which means it'd be 1Y. It'd be 1Y so the third number is the stop hunt. This is the amount of times that price failed. So these red arrows. So if you see 2 red arrows, then you're going to see 2X. See how it says 2X? So that's what that means. All right. So in this case, it worked the first time, worked perfectly. You got a pretty nice move. So had you longed, gotten to a position there, you got a 17% move in Bitcoin, and on altcoins, that could be like freaking doubling, right? Like on future, and plus on futures, that could be really, really big moves. Like, this is a fantastic indicator. So here you had a 17% drop from top to bottom, right? You had 2 failures. So price got above the orange line and failed, above the orange line and failed, and then it worked. But you had 0 stop hunts, because if you waited to get into position until those parameters were met, Stokes came all the way down and you rode this line, then it worked the first try. You just had to wait until the Monopoly board was favorable. So instead of longing this and longing that and longing this and longing that, right? This one would have worked, but the edges weren't with you. That's like me getting lucky the first 2 times. Yes, you can get lucky, but over time, that's not what you want to do. Why wouldn't you just wait and only take trades when you have a favorable Monopoly scenario? Right? You don't want to roll into this. You don't want to try rolling into this, because you don't know if this low is just another one of these or another one of that or another spike low or another one of these where it actually goes lower, right? Like, you don't want to roll it. So that's like getting lucky on the Monopoly board, like I did the first 2 times, if you were to try to long that. Now, are there some indications, like with this, if you had 3 strikes of bullish divergence on the 1 hour, that made it slightly more probable? Sure. If I have 3 strikes of bullish divergence on the 1 hour, I probably would have tried that. But that's a kind of an exception. That's just another type of entry. Totally different entry. You're using different, your expectations of your probabilities are different in that case. But anyway, but here again, price came above the 200 EMA. It stuck its landing. Stokes came all the way down. You had 1 little baby stop hunt. So not even necessarily like a big higher low. It is a higher low, but you didn't even get close to retesting lows. So you had 1 stop hunt, and then you took off. And then it happened again. It got above the orange line. Stokes came so see how, let's zoom way in here. Watch. So you see how Stokes, so I'm going to draw a straight line here from here down. You see how the Stokes did this? So they got close to the bottom, rounded out, and rounded back up, right? So the method worked with one stop hunt. This is the stop hunt right here, right? But that's normal because if you're in futures trading looking to roll into that monopoly board, right, you have to have the expectations of, you know, trying your entry at least twice. All right. So here, before this stop hunt, you know, this method worked with one stop hunt, you had four times price came above, right? And one stop hunt. So that was honestly a hard one to trade. That was a tricky one, but all you had to do was wait. So in that case, even though that was a tricky, all you had to do was wait for the monopoly board to change and then try it twice. And then boom, you're just in massive profits. Just took off. That's all you had to do. But it's hard to be patient. You want to be rich tomorrow. I totally get it. That's why we're here. We're here to make money. I understand. But even in that super tricky scenario where it took a long time to work, you simply had to wait for a monopoly board to change and then roll your dice and then try it a second time. That's it. That's not much to do. That's not much to do at all. But the hardest part is freaking waiting and stop trying to catch lows. All right. So here's another one. This is one of the more odd ones. You had a stop hunt, but no technical failure. So the time it got above, it did stick its landing. The Stokes came all the way down. It still had a stop hunt, and then the next time it worked. So it had a 10% dip from here to here, 0 failures, but one stop hunt. Okay, so here again, all you had to do was you actually didn't have to wait. So you could you see it, you didn't even wait, you enter, and then let your stop sit and try it a second time. That's it. So see here where it came above, the Stokes came all the way down. Then you re-enter the second try. It worked. And look how massive of a move you would have gotten. Look at this. Look, imagine how big of a position you would have had on altcoins just waiting for that shit to happen. You would have made so much money. Just trying it twice, waiting for this one rule to happen twice. So here's another one where you had to wait for the second turn. The second turn, you had one failure. So price came above, failed, came above, gave our signal, little baby stop hunt, go again, wait for the Stokes to come down, wait for the Stokes to come down. Stokes came down, stuck its landing, kablam, enter, and look how amazing of a position you would have had. Look at this. Look at that, right? This one had so this one actually gave a perfect signal, right? Okay, look. So all these failures above, you had 5 failures with 0. So you only had it. So 0Y means you only had to try it one time. There were no stop hunt's. You just waited for the signal, which it was here. So let's zoom way in so we can see how this is behaving. Watch this. Look at this crap. This is so simple. Look, the hardest part is you. The hardest part is just waiting for this to happen. I'm telling you, this is stupid simple. Stupid simple. Look. Came down, the Stokes bottomed out. So look at the Stokes. Look at what they did. Look, all the way down, rounded up. You only had to wait until there. And you got it on your first try. Massive moves in the profit. Okay, so let's go back to the statistics behind this. Check this out. Watch this. So now that we know what we're looking at, it's going to be cool to look at these statistics so you can know what your numbers are behind this and relate it to our monopoly board. Damn, I gave a lot of examples. I went really far back in time. All right, here we go. Look, here you go. So if you simply wait for that with this sample size of 10, right? So over time, these numbers will change a little bit. And I imagine over 5 years, this number might become 1, right? But right now it's 0, okay? So it always sticks its landing before a blast off, 100% of times as of now. So these are the numbers behind that. So right now, technically, because we got all the signals, there is a 70% chance. So now the edge is with you. Now the edge is with you. New viewers, if you want to learn how to set up a chart like me so you can follow along a little bit better, you're going to want to watch this video here. And for returning viewers who might not have seen all my content, I'm going to leave a video for you here that you might want to check out. Watch it if you haven't seen it. And before you head out of here, make sure you flip your phones or get flipped off. Please hit the like button. It's going to help me continue making more videos for you. And now that your phone's already vertical, leave me a comment, even if it's a quick period without the tampon, or yell something random like "I love zebras and unicorns," whatever the case. Leave me something, comment, help out the algo so I can continue making videos for you. And we'll see you next time.